start off looking at potential entries and opportunities and invalidation for the previous week. Okay, I typically don't trade Mondays because it happened to be a time of accumulation. I let Monday pass by, which hit sell side and decided to create a divergence SMT for a low for my ES and higher low for my NQ, suggesting change in state of delivery, which it occur over here, and we can see this 5-minute chart. Obviously it's a bullish trend. So for Tuesday, I am expecting a retracement down into Monday's range in order to go higher, which it did, but it was not very sustained. Hit the new week opening gap here and then just decide to come back into range again. Then it did a consolidation profile after Wednesday before it had a more obvious move, but nothing too big, so we're kind of like taking intraday trades. But what we see here is that even if it's intraday, there were a lot of handles. Okay, so we start by looking at Tuesday's London session. We had a high here and hits the new week opening gap before declining low, creating a lower low. So in this case, what happens here is that with all the lower lows created, there is sign of weakness. So we will be looking for shorts, and it also fits my theory of retracement back into Monday's range. So I've drawn two premium and discount ranges, one for right at the bottom of Monday's range, and then another one here after the stop hunt. Oh sorry, there's no stop hunt. It's probably stop hunt in ES, was it? Why I drew this? No. Anyway, it marks a low of the next leg here, this leg right here. So hence we were really looking for back into a discount area. So let's see if there are any potential entries. So if you just want to go short, right? As you can see here, as I was saying, there was lower highs created. So with the displacement, here comes the confirmation of a short, and then it goes all the way lower here, and then starts to reverse again. And this probably is the lowest sell order first stage of accumulation for market maker sell model. And here is my entry pattern. I take an entry at the wick candle body of the candle that touches the pattern again. And of course here is the highest wick, but then this candle body is too large for me, so I choose to take either this candle or this. And in this case, if I choose this red candle over here, it did fill, but if I have chosen this as well, it would have filled. Okay, and if we have taken a short, we could have targeted the new day opening gap here, which it fills very beautifully. Although this could have been a little bit of a mixed signal here, because it came up back again. Instead of, I would like it to go down straight rather than coming up again. So you have given me a little bit of a jitters. Okay. So once the external is taken here as well, we can see it retraces back to internal range. And here was another potential entry for the next leg down. So here's another entry as well. And I was saying my entry pattern is taking that entry of the candle that taps the feather gap. I call it the imbalance order block. So in this case, it's like a very short block. So I wait for the candle to close, just like an order block, and then yeah, it's order block entry. But here you can see it's not really an order block entry, right? It's just the candle touches the feather gap, and then I enter at here. Yeah. So that this was 197 candles with 8-hour trade, and here is also similar risk. Of course, maybe I would have been more conservative and taken my stop loss here. This is okay because it's right above the fair value gap. So this 6R. No, yeah, 6R. I took up to what? Slightly after London session to hit. So yeah, very beautiful. Look correspondingly in ES. It's been a scare. I may not have taken this trade here because on this equal highs created here, I would think that it's a draw on liquidity would have just ran this out as a stop hunt before going down again. But if we have stopped ES, accordingly we see that it created intermediate some high here. So this will also give you some better assurance that the tide is going down, right? So on ES, on the similar entry pattern, there's no view. It's lagged by a gap. I mean, one tick also, or two ticks. I call it the retracement order block because it's just my personal annotation, but it's more of an imbalance order block, right? So for on ES, correspondingly, it's here. So I'll find the highest candle that touched the fair value gap. But in this case, the fair value gap has been exceeded. Yeah. So no entry, but subsequently, you can see that this is the candle that touched the fair value gap again. So we could have taken an entry here and place a stop loss probably here is the most conservative one. Alright, at the because it has fully filled the fair value gap and here has some balanced price range. So we don't expect it to go back again. Right? So could have taken the fill somewhere around here and endure some drawdown of almost half your initial stop and creating equal highs, which has been quite scary. Before just targeting this low where you did a 2.4 trade with 19 candles. If you have targeted the relative equal lows here, that's fine as well. It's a 32 handles trade. And of course, if you feed it well, so my feed means anchor here. I don't really have a good gauge of this type of feeding this type of price sticks because I don't know where to anchor them. So to be conservative, just anchor the last candle before the reversal. Whereas this is more clear where to anchor the feed because you can see a very distinct high and low, and we expect it to reach the -2 standard deviation before retracing back to the silver bullet zone in this purple region and expect it to go to -4. But does it? Oh no, it didn't. So this would have been scary, and I may not have. How should I put it? I may have let trail stop here. so here's another entry as well. There is another bearish order block. There's no fair value gap created here except for this one. Yeah, so here, because there's a fair value gap, and here is my entry. I wait for the candle close, which is this, but no fill. Yeah, no fill on ES. Then fill. Oh yeah, so there's a fill on NQ. So this is 217 handles. Pretty neat. And of course, if we went down again, you will have seen other entries as well. So I think the bias here is very important. So if you are really looking for shorts, or you are looking at shorts, it's very hard for you to switch back into long, looking for long. So probably, I'm not sure if it's a personal thing, but if you are able to look at both sides, then it's good for you. But if you're already very fixated on one side, maybe it might be hard for you to change, which is what happened to me. I was looking for, if I'm looking for short seller, I can only see bearish PDA. It's very hard for me to switch my man see bullish PDA rates. Yeah. So what I'm saying here is I wanted to join the premium discount leg of this run and see if we offer a premium entry, which it did. So, but this order block is right at the equilibrium. So yes, it offer. We could empty in this order block as well, which also offered an entry. But whereas its terminus could have been this, which it didn't hit, or be more conservative 30 handles. But for ES, I think having 25 handles is considered very good, but 30 handles is quite something. It seems like the standard nowadays has been in for longer runs. Okay, anyway, here we reach the terminus and we expect some retracement, but unfortunately it went down to create another breaker, bullish breaker here, low, high, low, low. So let's move to NQ as well. NQ was create another breaker. So if we would have entered here, we just need to really watch out for any other entries in the discount region for shorts. You like to enter in the premium region. As you can see, if you enter at this order block over here, your happiness will be short-lived and you'll be stopped out soon. But if you have taken another entry here again, re-entry, you would have break even, I think, or even be in profit. Yeah, but yeah, for NQ, is it clean? Negative 2.50, retracement back to the silver bullet. Yeah, didn't hit. And then went back. It's not too ideal. And hitting a -4 eventually at 940. So that's good. Okay, so London as the manipulation leg, then we expect bullishness. Alright, so this is hard. But I typically would do my standard deviations like this, but yeah, this range is too big. So I did expect a very large move, but apparently it didn't. But anyway, for ES, it's more, you can see here quite clearly there's a model right here. When it hits negative 2, so it will retrace back to the purple area. But unfortunately, it exits it, but then it did start to climb back out again. Yeah, in this case, when the lowest red candle here if a candle close above this, you could see the change state of delivery. We could take an entry over here. Yeah, which I and expect it to go up to -4, but it didn't. Yeah, so the highest it went was 50 ONs. But good enough. For NQ, what do we have? Round 2. No entry for NQ because it didn't close above this red candle. Yeah, but even so, the points for the mouse stop is too much. It's not worth the risk. Yeah. Whereas in yes, probably more manageable. But I might not have taken this entry here all the way. Where he didn't even hit this, but he only hit this liquidity before having a sharp decline all the way back, erasing all the gains from the day before moving back up again. So it's very fickle. So that was the only trade I believe for the Tuesday's morning. Hold on. NQ wise, I mean, unless you already predicted that this is the stop hunt here, and this is the model, you could have taken YouTube 2022 model, but there was no discount field. So the candle closed, yeah, didn't touch the order block at all. Oh, actually it just touched the wick, which is not too ideal for entry, and then created a low. And we can see here this is just a weak institutional order flow entry drill, and my imbalance order box suggests that if I could have taken this trade, this will be my stop, but that's too wide, so I would have taken it, and running it up is about 1 point, so it's not too worth it. Anyway, changes their delivery here again, but no entry. The only entry is offered here again. Yeah. So this is a potential entry, but the stops might be too wide for my liking. And you can take bear partials at the low of the new opening gap, the midway. Oh man, this is truly the midpoint. Did he hit? No, barely hit. Oh, this is bad. If you left a sell limit here, you would have filled, and you would have been had to endure this amount of chop from 1 o'clock to over 1.5 hours, 1 hour 20 minutes of chop. It's not nice. Okay, anyway, looking for more opportunities here. There's no entry here. There's a fair bit left open. Too many regularly equal lows here. Not comfortable to take this kind of trade. Which if you put your stop loss here, just a magnet to be taken out. And it's for lunchtime, yeah. So no more trade. Okay, so that's it for Tuesday. So going to Wednesday, after observing Tuesday's movement, so Tuesday we had the low and a high in a very narrow range. So I expect Wednesday to continue to have the bullish movement. So let's check Wednesday. Started here, low, expand, reversed, retracement for London. So let's look for a short in London. The short would not have panned well. If you have seen here and a displacement closure below here and here as well, you might have wanted to take a shot when it came back to premium like this at the fair value gap and try to target the lows, but yeah, would have been stopped out. Let's see. Wait. Okay, yeah. Look at the corresponding chart in ES. How does it look? Lower highs indicating bearishness. Draw out the range. The range went to discount. Hit some value gaps and reverse. So there was not much of an entry per se. Of course, let's try to draw the Fibonacci standard deviation. We can see that it has already hit minus 2.5. So, and when it did close back, but oh wow, this might not have been a very good sign here. I might have been caught here with a losing trade because let's say I expect it to go further to -4, which I technically should not because I'm bullish and I don't expect to have such a deep retracement. But if I'm expecting bearishness in London, I would have taken this trade here. I'll find PA rate this zone, which is this bearish order block. With a stop loss of such, and then going down to -4. Yeah, would have been stopped out. So this would have led me on. See this candle going down. I thought I'll be on side, and if I did not shift my stop, trail my stop down, because it's quite fast. It created a lower low, and the next thing is it came right back close to my entry. That's my entry. And very soon, if I don't cut my position here, I would have taken a loss already. Yeah, so it's quite fast. Most likely take a loss here. But anyway, now let's look at ES if there wasn't same trade. So anchor the high, need -2, and also measure the move. How much was the movement? This is about 150 handles, which is quite decent for manipulation leg. So which indeed it was a manipulation leg. ES wise, let's see. The manipulation leg. This is about 25 handles. I learned something new here. 25 handles for manipulation leg in ES. So anyway, it goes long. So back in when New York session starts at 9:30 and 8:30ish. Don't think there was news on Wednesday. So just looking for 9:30, which it hit the order block and then it went up and it's done. So also let's trace the So if I take this leg here and low, I would have so ES hit -2, but NQ didn't. It's a bit shy of -2. But of course, if I took my Fibonacci here, projection, I would have hit -2. May have thought that this would have been bullish again, seeing it went up again. So I might have been caught here as well. So if I took the silver bullet model here, but here this zone of consolidation is very suspicious. That's gonna be taken out, so I would have taken entry here because of the proximity of all the stop loss. Let's say if I do it here like this, I barely stop, maybe stop. And if I don't trail it, I will also get stopped. I need to trail it here. Yeah. Stop very soon after. I wonder how many handles do that. If I trail it to just about 40-ish handles, I think. Yeah. Where's one ES 930 hit the on block. So one thing I think I was here before, but I wasn't very willing to take an entry is because I was expecting these lows to be taken. Because it was so many lows here, too many liquidity. But it didn't, so it just hit this on block and it went. See these two equal lows, another equal lows. I wouldn't place my stop like that. But anyway, if it was a quick fire trade, and I don't know who has the guts to take this one, definitely not me. It's a 3.4 trade here, hitting -2 level, and even -2.25 at 4 trade. Before getting through, if you had a runner, you would have been stop out. Yeah. So that's done. And here we have lower highs indicating a change in direction. So of course, this is an external taken for consolidation route. You would expect it to go into midway of the range, which is probably very low here. Midway from here to here, if you have taken profit somewhere here, you have gained. So let's look for shorts. But actually, this is already in lunch time, so it's probably not a good time to find shorts. Yeah, so I wouldn't. But just know that to mark down the not much of an entry really. Okay, let's say at 11, 40, 55, almost at 12. There's an entry here in this back but it's not to my liking because too many highs here. I thought that you still have unfinished business to go back too high, and there's no premium view, so no. But if you're talking about here, yeah, definitely it's premium view. This would have led you on, but then immediately came back to my rock balance on block entry right here. The highest week in a bearish fair value gap. But the stop has to be this wide because there's much gap here to be filled, so it may come back and fill here again. So unless you put your stop here or here, you're not very safe. So this would have been an entry, but yeah, I don't fancy large time trades, so I would have taken this. On the ES, let's see, there's an SMT created. This did not reach into the 05Aug gap. There's no raw imbalance pattern on the block entry, but correspondingly, if we were to take it like this, then that would have been a trade idea for the handles in 1 hour. That's quite decent. So Wednesday ended off with a low created within the range, but not exceeding this as well. So not sure what to expect after Wednesday. But going to Thursday, we can see that price is largely flat, consolidating within this high and this low, and forming an even tighter consolidation right before the news volatility struggle. This will mean that when it's consolidating very tightly, it's going to have an explosive move. So you may not even want to take any stops here. You may just shoot. So it's kind of a gamble here. Yeah. And when it comes to having large green candles, I don't have the confidence to trade because I don't know whether would it go to fully fill or would it go to me just start in the middle. So in this case, it started in the middle, but I didn't really have a feel. This shows bullishness, but I expected it to come back here again, but it didn't. So price left and leave and continue leave. Yeah, all the way. And it's hard to do standard deviations. Unless, let's just try projection. Or maybe from the lows even. So -2 definitely hit. Did he retrace back to -0.5? No. He -0.4? Yes, he did. He did. Oh, only on Friday. Yeah. So Thursday's chance on ES is not much. On NQ, I don't really have an entry here. This is too much, too wide a stop loss for me. It's like 136 candles. No, I won't take it. Whereas on ES, what do we have? We have stop hands right here. Orderblock created, but also no entry base, too bullish. Yeah, too bullish. What about here? No fair value gaps. I mean, if you draw the premium and discount from here and you look for a discount entry to go along, you also wouldn't find it. Yeah, let's try this on NQ as well. See, the dealer's retracement was here and it's gone. It left. This region is undesirable, so you don't want to be caught here. Trying to take a position and then it does nothing. It's expanded so much. You just want to consolidate. Then before going again. And there's no stop on here before you mess up. Likewise for NQ. Consolidation. Oh, we did take a stop on for NQ. Yeah, so yeah, but it's already enough to So no trade for Friday. What are we looking at? So if Thursday has expanded and has closed, not close Wednesday's range, we may be looking for. Oh wait. Thursday did finish off Wednesday's range. Sorry, I'm looking for continuation for higher, but I'm still also a bit weary and cautious because it's the last day of the week and it will close or close off the week candle, so it may go back in the opposite direction of the closing back into its range, which is what we see here in the morning session. Okay, let's go to ES as well. Where are we? So London, it was bullish. It's London's leg. Sorry, let me get my bearing. When did Friday started? Here. Friday started here. So it's like second strike external to internal. Lower highs, indicating bearishness. Come midnight open, took liquidity. Yeah, for ES, it took it out completely from an SMT here. So we expect it to go bullish. Yes. Oh. Yes, took this out here. Sorry. Wait. That's midnight. Oh, okay, so no. Didn't take out, so it looks the same. So I would have been interested in a short. Let's look for shorts. Okay. So I would think it hit this range here. The fair value gaps right here. That's NQ. ES, let's do the retracement. Last candle or the highest candle here. Hit -4, right at the -4. See? Whereas ES, what do we got? Never hit -4. Didn't hit -4. Okay, let's look for shorts during London session. Assuming I want the daily expansion candle to accumulate, manipulate, and then distribution in New York AM. So I'm looking for shorts, and I've drawn out the Fibonacci projections. And West London session here. Oh man, London is not even here. London is not reversing. This leg has been completed, so it's going back to bullish. I don't think I have any read on this. If Asia already did so much. Okay, we do expect bullishness. Relative equal lows engineered here, but so I won't be really too keen on taking a trade here. It only started to go up on at 4 o'clock. Yeah, well, I can't really see anything. It's just regional consolidation. So is it supported by bearish? Yeah, anyway, I was stop out here. just want to share how the lessons that I learned. Okay, so I was expecting to continue short further, but I did not count that, yeah, the minus 2.5 has already, the move has already been done. Okay, so I was expecting a few in the premium fair value gaps here, and I think it also respected bearish PDA raise here. You can see this was an order block, and once it hit, there was an immediate rejection. So I thought this was the sign at 3 o'clock. It is going lower. Okay, even here as well, it's already in premium area, and this would have led me on to think that it's going down, but it didn't. So here's the second point of fake, thinking that it will still be a short, but it's not. It's all supported by this candle here. Let's look at ES, what's happening. ES as well, but ES we see further support by this volume imbalance, is it? Yes. And then here we have touched the order block over here, this down close candles. On this one as well, which it did touch the middle point, and then you had immediate rejection. So as you can see here, it was consolidating. It's very mixed. You know, if you traded London session, you would have not been very clear. So it's balancing between the premium levels here, fair value gap, supported by this fair value gap, and then supported by the bullish orderblocks right here. Price trapped within before breaking out, and then going higher. So calm, and then melting right after. So this is like 6 o'clock now. There's a region of accumulation, so I happen to be expansion, so I wouldn't be trading as well. Come New York time, there's no news, and it's just very messy, very balanced price, not like a clear expansion like this. So try to avoid when you see price in this type of movement. Maybe this can be quite inviting, because we can see that it's quite clear that there's a bullish support here. So this would have been a good trade, but let's see if it falls within premium and discount. It does. This is a premium discount order block, and if you had targeted here, that would have been sweet before getting the runner trade stop somewhere here, and then apparently another entry again here, going up before finishing off the week. So yeah, let's see for NQ if there was any such entry. So here's quite neat, but NQ is messy. Yeah, not sure. This is NQ's entry. See, it's supported by the order block. It left, and there's no more retracement back. Only after here. So this is my model. If I had been patient for it, I would have been filled here with a stop loss of here probably, or even the end of the order block, and riding it up. Although this, see, higher highs, so indicates that it's bullish, but this is not good. I would have thought that this candle will continue to pierce higher, but it did not. Yeah, so this very misleading price action. So we created a lower low and lower lows here, lower highs here, and did not want to go down further. Did wanted to go down further, did not break through and make any new highs, and hence should cut your position if you are long here, because yeah, we're mid stop out. And here we see like lower lows. So that will be an entry here, but it was in noon time, so not too fantastic for noon time trade. But now, wow, this is quite okay. 12:50 macro timing, the touch and unlock. The next candle starts to move, and then if you 68 handles, yeah, very good for short move. But let's do the reach. Always forget to do the standard deviation projections. So let's not forget this time. If I would have targeted -2, I would have hit here. Oh, and all the liquidity here taken. Yep. And how long would it have taken? 130 from 12:50. That's 40 minutes. 136. That's quite decent. For ES, there's no such trade except for this volume balance entry here, and then riding it up right here. Wouldn't expect this or more. It's a big candle going up before going down. Yep. And it's all very choppy around here. So those are the trades for and opportunities and invalidations that I have discovered for this week, and I hope that you have gleaned some of my understanding of how I explain entries and big stop out as well. I hope you get something out of this video and learn how to do backtest yourself to improve your own standard of learning. Thank you very much for watching.